hope everybody from around the country is having a good day. It certainly helps to get through a tax presentation at midday. Yeah, look, as Rahul said, with an employment taxes update, you can't go past the topic of contractors and contractor obligations, particularly with, I suppose, the recent activity. So today, what I would like to do is go through, or just a very brief recap on some of the High Court cases that have come through. Speak a little bit more about a federal court case, a full federal court case that was decided fairly recently. Look at some of the material the ATO's released, and then talk about some legislative changes to Fair Work. So we might get into this now. Now, just a quick recap, there were three main High Court cases that really changed the way that we look and assess these obligations. And the assessment I'm talking about is the assessment between whether somebody should be considered a common law employee or a contractor. And that's important because if you are a common law employee, essentially all the employment obligations apply, as well as many other obligations, that are present under the Fair Work Act and other state-based legislation. Once you've determined whether you're a common law employee, there are also extended definitions, some of which we'll get into later. But these High Court cases, they were all fairly different, right? So they had different circumstances and they applied for different reasons. In particular, ZG Operations was two employees that became contractors. They had their own trucks, so they had substantial assets. And that was different to the other two cases. And these cases really changed the way that we, or the amount of information that we can look at. Now, the last case in there, this was very interesting as well, because when it first came to the court system, they were looking at making that decision under the old set of rules. And when it finally got decided, the court essentially had to discount a lot of the information that they'd taken into account in previous cases. So I guess what was special about these High Court cases, and what makes them so important? Essentially, what they did was they went back to basic contract interpretation principles, which essentially means that the terms of the contract are king, and essentially you're looking at deciding the characteristic of the arrangement, whether they're an employee or a contractor, based on the terms of the contract or objective facts that are known at the time the contract is entered into. And in practice, this means that in the past, where we had looked at applying these tests based on all the information we could get, so including the contract and how it was actually performed, right? So looking at the actual control that was exercised, whether they had delegated in practice, did they have business over did the contractor have a separate business over the time they were working with the principal? All of that is no longer important. What is important is essentially the terms of the contract and things that were known at the start, right? So just noting that in practice, what that means for us is if there is a comprehensive written contract, it means that we are looking at that contract. It still is important to understand, I suppose, the substance of the arrangement, particularly where the contract or the contract isn't comprehensively written, right? And so the only way then that you're able to understand the terms of the contract is through the operation of the contract. So what does that tell us? I suppose it means in practice, we should be looking at the contracts that you have, and it does provide a lot more certainty for employers in setting up these arrangements for the common law principles. And in particular, looking at the contracts to make sure that they're comprehensively written and well documented, right? So that's not just the template that you use, but also other facts that might form part of the schedule are often, I guess, very briefly written in a lot of the work that we do. And so making sure that, anything that is important in determining whether someone's an employee or a contractor should be contained within those contracts, so the authorities don't go looking at other factors, I suppose. There are some exceptions to the way that these principles apply. So you need to have a comprehensively written contract, right? So that you can extract those terms and the factors that are important. But you also need to make sure that the contract wasn't varied over time. So understanding whether there are any variations to the contract will be important. And the last thing as well is making sure, I suppose, or proving that the contract was not a sham. So if the contract was a sham, then essentially you look through any legal form of that document. Now, I will get into a little bit more around this this last case. It's the JMC case. So it was a full federal court case, and then when this was decided, it was I suppose after the three high court cases, and they had to then, I suppose, relook at the information that they had and make the decision based on the new principles. It was a very interesting case, not only because it was one of the one of the cases where they considered these new principles and the application of them. So it gives us a lot more information about how they should be applied. But they also did place an importance on one of the factors that or increased, I suppose, the importance of one of the factors that are part of the multifactorial test for determining an employee and a contractor. And this was the power to delegate, right? So in this case, it was to do with superannuation guarantee, which is helpful because they're not only looking at the common law definition. If the individual was not an employee at common law, they were also looking at whether the extended definitions for super guarantee apply. And the one that they focused on was whether the arrangement was principally for labor. So in that situation, if it was, even if they weren't a common law employee, superannuation guarantee would apply to the arrangement. In this case, it was a lecturer, a qualified sound engineer who provided lecturing and marking services. While there was a suggested teaching plan, they were free to go about, I suppose, providing their lectures in the way that they saw fit. There was a fixed timetable that lectures were provided over and over, but that was, I suppose, negotiated at the start of the semester. So it's fairly inconclusive. I said the teacher had the power to delegate. There was also indemnities in the contract, as well as an indemnity for super. In this instance, the IPL rested with the JMC, which was normally would be considered a factor that pointed more to employment, but might not have been decisive. Now, if I had looked at this case a number of years ago, without looking at power to delegate, I might have said that the risk that the individual would be a common law employee, or even that the work is principally for labor, would be fairly high. That's actually not what the full court decided, and critical to this was the right to delegate, right? And what was interesting about the right to delegate was that whether it was exercised or not was irrelevant, but because of course you can't look at the performance of the contract, right? And what was also interesting was that the right to delegate was not an unfettered right to delegate. So in effect, the individual had to seek approval from JMC to be able to delegate their work. And I should clarify that this delegation is different to getting another employee of JMC to sit in for them. This is the ability to subcontract the obligations under the contracts to another individual or company. Now it was decided that this right to delegate, that there was a power to delegate, and this was of critical importance because, of course, if you can get someone to substitute, or if you can get someone else to do the work, then the contract is not principally for labor of a person, right? So superannuation doesn't apply, but it's also not a contract of services, but not a contract of service for the person either. And so this was, so once they decided that, it was a pretty clear decision to make that the individual shouldn't be considered an employee for common law purposes, as well as superannuation purposes. Now, leading into that, so once the JMC case was decided, shortly after in December, the ATO finalized their ruling, and they then provided quite a bit of guidance as to how we should be going out, or how they view we should be going about working out whether someone's a common law employee. And they did this for the purposes of working out whether there's a withholding obligation under the Tax Admin Act. And it goes through the principles in the High Court cases. And also then they waited until JMC was decided, and they've also put in some commentary on the power to delegate. Interestingly, they have not provided, well, I suppose it's not interesting, it should be expected. They didn't provide a unilateral right. They didn't say that a unilateral right to delegate would be would mean that they're definitely not an employee. So you do have to look at whether there are contrary terms in the contract. So you have to look at whether it's a right to delegate only parts of the contract or the whole contract. And I think the last thing to note also is understanding whether or not that clause in particular might be a sham. The other interesting thing about the ruling, as opposed to the rulings that came up previously under the old methodology, there's quite a lot about determining, I suppose, the terms of the agreement. So, working out whether you have a contract, a written contract, whether that contract is comprehensive, whether it's in writing and oral. So they give the example of Hollis, which is the bicycle courier case, where it was quite clear that the contract was partially in writing and partially oral. And then you're also looking at whether or not there are any variations to that contract. So there's a whole series of steps that you have to get into before you actually start applying the tests that we would normally apply to determine whether someone is an employee or contractor. I would say as well that they do make some comments on sham arrangements, right? And so they don't also then completely exclude the I suppose looking at the performance of the contract or things that had happened subsequent to the signing of that agreement, like we would have done previously. They will do that in circumstances for understanding the objective of the contract, right? Or the purpose of the contract. And they've also said they would do that to understand whether there was a sham arrangement. And that sort of leads me into, I guess, the practice compliance guideline as well. And so, describing what that is essentially it's a guideline which speaks about how the ATO apply their compliance resources, right? And it will rate arrangements in risk levels. So there are 4 risk levels in this compliance guideline: very low risk, medium risk, and high risk. And essentially, to get into the lower risk levels, you have to have certain process and governance in place. And importantly, one of the things that puts you into a higher risk category is where your contractual terms or your written terms differ significantly from how the contract was, I suppose, performed, right? So sort of linking back, so the ATO is not completely closing the door on looking at the performance of an arrangement. The other thing to note is, like, you would, to get into the very low risk category, you have to have a suitably qualified professional advice over both the common law position as well as the superannuation extended definitions, and also have to demonstrate that the contractor understood these outcomes as well. It's a very useful guide, and it looks to the ATO's focus on governance, and it is something that we definitely recommend that you look building into your own processes to reduce your risk for contractors overall. This is just a very quick overview over what obligations apply and how they might apply. Just noting, and you can see here, we've got some extended definitions for contractors. So the superannuation guarantee, which we talked about principally for labor, there are others as well. And the other thing to note as well is contractors for payroll tax purposes. These arrangements don't have to be the individuals, and they extend further than the common law definition and really look at identifying contractors that aren't as independent or are dependent on the principal entity. So what I've spoken about in the last few slides has been fairly good news, right? So it provides a lot of certainty, a lot more certainty to employers in understanding how to classify employees, so whether they're a common law employee or a contractor. And the ATO has released some fairly good guidance as well. One of the things that is likely to put us, or likely to derail that a little bit, is some Fair Work changes that have come through. And these This is part of a whole package. This is part 2 of the package, which passed on the 12th of February this year, and it puts in a definition for employee in the Fair Work Act. And essentially, what they wanted to do here was they wanted to reverse the High Court decisions. So in defining an employee, you need to look through, I suppose, or look for the real substance, the practical reality, and the true nature of the relationship. It's not saying you don't look at the contract anymore. What it is saying is we're going to consider the contract and anything else that's important, even if it does relate to performance of the contract. There is an exception for high income contractors, right? Helpfully or unhelpfully, that has not been released as yet. So it will only apply to a cohort of your contractors. And what that really means, I suppose, for us is there's another layer, I suppose, to the definition of employee, because of course this goes into the Fair Work Act and any derivative obligations out of the Fair Work Act, but it doesn't apply to other obligations that might where employee is defined in other sets of legislation, for example. So it does increase the uncertainty for employers. And if you're looking at the true nature of the relationship, that is something that can change over time. It is possible to do that. So it's likely to, make the initial review or a decision more complex, but also then, the ongoing monitoring as well being more complicated. And so I just have a quick slide here that outlines, I suppose, what it would apply to and what it doesn't apply to. So you can see here that you've got sort of the Fair Work Act and a lot of its derivative obligations or obligations that are defined within that. And I hadn't put superannuation in there, although superannuation has become part of that act. And I'll explain in a minute. But there are other then obligations in state legislation or federal legislation like superannuation and FET where this definition just doesn't apply. Now, in practice, I think this is probably going to push most employers to, if there is a risk that the Fair Work provisions apply, just making someone an employee, just to make it easy. It will then become really complex where employers or taxpayers get it wrong and you're trying to make that assessment. And you'll have some employers, you'll have some obligations that it applies to, and you're applying different definitions of employees, one for common law and one under Fair Work, and then all the extended definitions. So what's the way forward? We do now, the good news, I suppose, is we do now have certainty as to what is going to apply. If I spoke to you a few months ago, we weren't really certain whether that definition of employee in the Fair Work Act would come through or not. So we do know how things are going to apply. We now have finalized ATO rulings. The common law definition is well established as well. So it is a really good time for businesses to pick up their policies and procedures and make sure that they're updated. You may make decisions as to whether you want to restrict your vendors or your contractors so that you don't have any risks and it makes administration easy. Or if you can't get around that, what are you going to put in place to ensure that you're able to pick up the risky contractors? So things like the short form checklist that gets you out of 80% of your 80% of your contractors and 20% to look at, for example, and your detailed decision tools. And then how are you going to go about building in, say, the ATO practice compliance guideline to reduce that risk level? It's definitely also time to have a look at the contracts that you have in particular with sole traders, and legal should definitely be involved because we definitely do have some established principles. Think about whether you should be putting indemnity in for contractors where SG is not paid and whether this could be effective. Building in things from the ATO, as I just said, the practice compliance guideline. And once you've done all of that, then it's easy for any new contracts is just then thinking about what you do with contracts retrospectively, right? So the contracts that you have and how you might be able to transition some of those. All right. Now we've spoken about employees and contractors, and we've been through quite a bit. We did touch on superannuation guarantee as well. I just want to spend a bit of time now going through superannuation for employees, there are a couple of things I thought would be good to bring to your attention. There are some changes to the Fair Work Act that everybody should be aware of. And then I was wanting to speak a little bit about payday super. Um, Now, I don't know how many of you are aware, but the Fair Work Act, there were some changes introduced to the Fair Work Act, and they apply from 1 January 2024. And what it does is it includes superannuation in the national employment standards. Um, and so what this means practically is, apart from the obvious, there can be Fair Work Act penalties that can apply for breaches or shortfalls in superannuation. Employer organizations can get involved. So unions, employees can now take court action to pursue unpaid super, and Fair Work can get involved as well. Now, this what the intent of this legislation was to open up avenues open up more avenues for pursuing unpaid super. What Fair Work has clarified is that they will allow the ATO to have the main jurisdiction over this, and so or primary jurisdiction over this. And if I suppose the ATO cannot recover it, or they haven't taken action, that's where Fair Work will get involved, right? That includes penalties as well. So if you do end up paying the super guarantee charge, you're not also then subject to a Fair Work penalty, right? Now, in practice, what does this mean? It's probably going to mean that Fair Work, if they are looking at wage underpayments on salary, that they may pay attention to superannuation issues as well, where in the past it wasn't potentially part of their jurisdiction unless it was in a workplace instrument, and potentially then refer matters to the ATO. It will also, I think there's also historically been sort of a bit of a gray spot in between the ATO and Fair Work. So the ATO administers the minimum obligation, but there are, of course, employers pay more than the minimum, and not always voluntarily. So under certain modern awards, for example, you pay super on paid leave, all paid leave, including work cover. The ATO would never be able to pursue that because there was no breach of the super guarantee legislation, and Fair Work sort of never pursued super. I think what we'll find is slowly that this gap will be more understood, and we'll start getting more regulator action in that space. Payday super. Now, this is something that's coming in July 2026. They have a proposed design that they're getting consultation on. But essentially what it is it imposes an obligation to pay super at the same time or about the same time as salary and wages. It's going to involve more real-time reporting, and it means employees will get their super quicker. There's a bit more transparency. So pretty good things. One of the things that I am a little bit concerned about, though, is in the proposed design, it seems that we're moving away from a self-assessment system. And so sort of what I mean by that is that currently, if there's a shortfall, the employer discovers it, they lodge an SGC statement. If the ATO has concerns because there's a complaint or it's a risk-based identification, they'll come in and do an investigation. As part of the proposed design, it looks like the ATO is going to, based on the information provided, recalculate super. And if there is a discrepancy, automatically raise assessments, which then if the employers don't agree with, they have to contest, right? So my concern there is that anybody that's done payroll recalculations knows that there are going to be discrepancies that come up that can be explained, and a lot of them can be explained in good ways, so that it's more like a false positive. So my concern here is that it's going to increase administration for employers as well as the ATO, and we sort of get bogged down in a lot of these discrepancies that are coming up and being contested. So recommendations, given the changes that are coming through, and super is also going to be part of the wage theft legislation as well. It is a really good time to review your payroll system configurations and test the calculations. And given Fair Work is going to have jurisdiction over this as well, and they look at all your interconnected systems, so your time and attendance system, the HR system, in working out wage underpayments, it's a good time to extend your reviews into those connected systems as well. When we've looked at this in the past, particularly between the time and attendance system and the payroll system, there can be issues caused by things like if overtime has the same pay rate as penalties, they might get pushed. A penalty might get pushed into an overtime pay code in your payroll system and cause a superannuation shortfall that way. So the recommendation is start looking at interconnected systems as well. With payday super coming in, we're going to be compressed. We're going to have really compressed timelines to actually make for your superannuation processes. So have a look at your processes from when you finish your pay cycle to then getting your super file that gets uploaded to the clearinghouse and superannuation paid. Have a look at those processes and see whether you can start streamlining or get an idea as to how you might streamline these processes. Yeah. The last topic I suppose that I wanted to cover before I hand over is payroll tax. And this has always been quite topical. The revenue officers are very active in this space. So we might do just a very quick recap of what payroll tax is and some of the contractor provisions, but then we'll get through some of the audit areas, which is largely unchanged. And I did want to highlight a particular matter based on a few cases that have come through that's got quite a bit of attention in the medical space. And the reason I wanted to highlight that is because we are seeing the revenue officers apply those principles more broadly. So payroll tax is imposed mainly on remuneration. So it applies to broadly the same things as employees would be taxable on, plus a few additional things, as well as then it applies to superannuation, and importantly also that includes deemed employees as well. So I suppose there are some differences between the states, particularly with contractors. So WA uses a more of a common law definition of contractor, whereas all the other states have this concept of relevant contractors, or relevant contracts, although ACT applies that a little bit differently. So relevant contracts, the way that we look at that, so anything other than ACT and in WA, it pretty much picks up any contract that has a service component in it, right? So where you're paying for services, that gets picked up by the rules initially. And so you can imagine that's quite broad, right? So we're not looking at multifactorial tests or anything like that. You're picking up anything service related. Then what you do is you work out whether one of the exemptions apply. And there are specific exemptions, such as the insurance agents one, owner drivers or door-to-door sellers, or the more general ones. So the ones that I suppose many of us would be familiar with, 90 days. There's, whether it's a service of a type ordinarily required for 180 days, and that one only applies to the type of service, so not the contractor individually. And one that has been, I suppose, looked at a little more over the last year is whether the commission is satisfied the contractor ordinarily renders services of the type to the public generally. And what's important in looking at this exemption or exclusion is that it has to be service of the same type, right? So if you have different types of services that you provide, and it just happens the contractor doesn't provide that type of service to the public, providing to the principal, then this exemption doesn't apply. Now, moving on to the audit activity, this is largely the same as it is in prior years. The Revenue Office have always had a focus on contractors, and we just went through how those rules apply, and so the reviews, if you do get an investigation by the Revenue Office, these are usually fairly detailed, and we all can apply the rules. And we should be able to apply the rules quite easily. So like if there's 90 days, well, it's likely this person provided service for less than 90 days, so we can use that exclusion. What is important in an investigation situation is the ability to substantiate this, right? So, if you're getting investigated by the Revenue Office, it's quite easy to say, oh, like this guy was only paid $10,000, so he can't have been providing services for more than 90 days. But the Revenue Office often go further than that. So they want to know, maybe the contract duration was shorter than that. or they want to see that there's a record of days worked. And this applies to a whole bunch of other to all the other exemptions. So it's quite important that you are making sure that you're doing that analysis properly, but you're able to back up that analysis with documentation or substantiation. Employee share schemes. Now this, because it's not part of the payroll system, often gets missed, right? So employers will miss that. Even more so if it's a foreign scheme that maybe the payroll team don't administer. So we often see issues that way, and it's really simple for the Revenue Office just to see the reporting coming through the ATO and working out that nothing's been disclosed for payroll tax purposes. They have a big focus on employment agency provisions, but this really applies to particular industries, right? And it's more the lower skill industries. So it's mainly labor-based and industries that are rife with subcontracting that the Revenue Office try to impose these provisions onto, and it just gets around the subcontractors being able to use relevant contractor provision exemptions, essentially, or it prevents, I suppose, businesses subcontracting to get out of payroll tax, liabilities. Grouping is another one that comes up quite a bit. So, I think most groups should understand, if you're owned by the same business, you're a payroll tax group and you lose the threshold. The revenue officers will go through ASIC records to work out, there's common directors, the names are similar, and you can get pulled up for grouping. A lot of times this also gets missed if there's a silent investor or a foreign investor and the businesses operating actually don't talk to each other. So, it is something that is fairly commonly missed and should be looked at. The last thing I want to talk about is data matching, and this is becoming increasingly important, particularly with all the rich data that they're going to have access to. So we've had STP2 come in, you've got your work cover returns, you've got income tax returns, and it's going to become increasingly important to make sure that you're consistent across all your reporting, right? So, if your payroll tax returns don't agree to the work covered disclosures, the compliance risk is higher and you're more likely to get an investigation. There are certain things that are disclosed in your income tax returns as well, in the disclosure items that the Revenue Office will data match to. And if they don't match, you're more at risk of an investigation as well. The last thing I'll say is with STP2, there are a whole lot of reporting categories. So making sure your categories are consistent and they aren't causing, I suppose, too many discrepancies with the Revenue Office data matching will also help to decrease that risk. Yeah, so the idea is making sure not only that you're lodging your return correctly, but you're lodging your return and making sure that categories align across all your disclosures. I did want to spend a little bit of time just going through some a recent development. I suppose it's got a lot of attention over the last year in the medical space. Now the cases came out a bit earlier than that. The reason I say it's important is because we're starting to see the Revenue Office apply these principles more broadly outside of the medical industry. The two cases, the Optical Superstore and Thomas and Nas, both involved, I suppose, the Revenue Office taxing, I suppose, amounts paid that the deemed employers weren't actually entitled to. So in the first instance, Optical Superstore, these it was determined that trust distributions to optometrists was subject to payroll tax, right, under the relevant contractor provisions. And similarly in Thomas and Nez, the medical centers were collecting doctors' fees from patients. So the doctor bills the patients a certain amount. The practice collects the fees and distributes that to the doctor's bank account. So those amounts were also treated as being subject to payroll tax. And over the last year, we've seen some clarity over the different rulings that have come through. And in each of those rulings, we can see the Revenue Office increasingly applying anti-avoidance provisions to bring in amounts subject to payroll tax as well. So the one that they've been applying quite a bit is in the New South Wales Act, is the Section 46, which is where they look at payments to third parties. So this is preventing employers from diverting payments to an employee's spouse, as a very simple example. Um, and so it's not paid to the employee, so it shouldn't be subject to payroll tax. So that provision would apply then to treat it subject to payroll tax, or equally where the amount's not paid by the employer. So, I think where we might see some activity in this space outside the medical practices, is obviously if you have similar structured arrangements, so collection of fees. So in the doctor arrangement, it's a collection of doctor fees. The doctors then pay the clinic for the use of facility and the administration and billing and stuff like that. If there are similar arrangements, then they will be targeted. So allied health. But also, I think if you do have employees potentially that are, they're getting distributions as owners of the business as well. So like if you have a particular class of shares that you issue to employees and they're entitled to dividends, the revenue office will start increasingly looking at those arrangements to see whether or not these provisions might apply as well. So it's a watch this space, but something really to pay attention to. And if you have those arrangements, assess the risk. I've spoken a bit about some of this. I think one of the things I always say is payroll tax has always been a very manual process. Like you have your monthly returns often in spreadsheets. There's no software that you use to lodge it. And that's partly due to the revenue officers are not releasing the appropriate software to be able to do that. But it's always been a very manual process, and it's been like that for years, and it hasn't changed. And I think with the rate that technology is increasing, it's worth looking at those processes to see whether with the existing technology you have, whether you can increase efficiency and integrity of the process. And I'll give you a quick example of that in a minute. The second thing is we spoke about reduce your data matching risks. That's a bit of a no-brainer, and it's quite easy to do as much as you can. And the third thing is, like, if you don't have a major issue like with contractors or grouping, more often than not, we see employers overpay payroll tax, and that's because you're not utilizing concessions or rebates. So that could be apprentices or trainees, or just treating wages or the way that you structure your wages hasn't been treated correctly in your payroll tax return. So, like how you treat fringe benefits and salary sacrifice and things like that. And you can be leaving quite a bit of money on the table. So making sure that you're not declaring too much. And the last thing we spoke about as well was, emerging risks and paying attention to those, particularly the one that I spoke about. Now, just an example of how you can improve your processes. This is something that we did for a client in Excel, right? And we use some of the functionality in the back end of Excel. And all it does is a template that pulls data from the raw file. So you just pull it out of your payroll system, you dump it in a folder, you update the file paths, and this spreadsheet populates itself. But it's got built-in reconciliations between the different payroll data. It'll throw up error messages. And it's quite easy to do, right? You're basically changing file paths for each of your relevant files, including your payroll data, and then press refresh and off it goes. And you can see here that it just basically then populates the information that you need to complete your return. So simple things like that will reduce the manual handling of data. It speeds up the time you're actually doing this. It quite easily allows you to change the setup of pay codes and other things that you're doing. So it is worth thinking about how you can use existing technology to change a manual process to something that's a lot more efficient.